this video the same day that it also sounds like I may be getting a little sick here. But essentially, I'm making this video, for people who are scared to get started or just don't know how to get started with anything as far as investing or think they just don't have enough, and show you the possibilities of what you can do even starting with a small amount of money, which is relative to anyone. So small amount of money, I'm gonna give you the range that I think you should be at, which possibly, 1,500. But you can start with $100, $50, $10, $25, and just let it grow until you have enough to do more things with. So in general, it's gonna be like a little 7-part series or so, 6 or 5, I don't know. But I'm gonna go over some of the options you can do to, make big gains right away, but build your way up to that. So it's going to be based off skill level. So we're going to have basically the safest to the riskiest things that you can do as far as, investing your funds and keeping them there. This ain't Wall Street bets. We're not going to try to, flip $100 every day or anything like that. Yes, you can do that, but you wouldn't be watching this video if you already know how to do that. Now, I will be showing you examples because I did start a small account. I know I initially invested like $500. Then I said, let me do one for crypto and then one for ETFs and then one for options. So it did go a little bit higher, but I think it's like around 1,700, which you'll see in a little bit. But regardless, it's still considered to me like something that's doable by everybody. So for the first portion, pretty much here's what we're going to be talking about. So ETFs, stocks, high yield ETFs, mainly the ones that pay weekly and monthly, options, crypto, a prop firm, and then a personal trading account. So from a scale of, I guess 1 to 7, 7 is going to be technically the riskiest, but of course, if it's your own personal account, then it don't have to be risky at all, which by personal account, I should change this. There we go. That's what I meant by personal account. So your own personal day trading account, swing trading, whatever. So not to get confused, with your normal account that you're going to have your ETFs and your stocks and stuff into. So just to go ahead and get started. So ETFs, what I did was I took the highest or the most popular, the ones that have the most money into them, and then put them in order from least to smallest. So even the smallest one, which is basically this one right here, iShares, it still has 115 to 120 billion dollars in it, and it's basically just bonds. So your money don't pretty much move. It don't move up. It don't really move down. And you'll see some of these examples I'm gonna show you. So just to go over them, VU, which is a lot of people's favorite, is by Vanguard. Is basically the S&P 500, just managed by Vanguard. Then you actually have the small cap S&P 500, which is the ETF version, not the actual SPX, but the S&P 500 ETF. And then you have the iShares SPY ETF, which is the same thing as the SPY. And then you have the Vanguard Total Stock Market, which is exposures from large to small caps. So think like Tesla as small as to whatever a small cap is, like, I don't know, SoFi and Robinhood, even though Robinhood's pretty big now. Then you have Invesco QQQ, which is, tech, everybody's favorite NASDAQ basically. And you have the Vanguard Development, so international stocks. And then, the Vanguard value stocks like Ford, Hershey's, things like that. And then another international by iShares, and then the iShares bonds. So let's go over what those look like. So let's say you did go the ETF route, which I advise everybody to start this way. Just put your money on automatic deposit, $100 a week, whatever you can afford monthly, and have it go straight into these funds. So these are the same ETFs that I just talked about right here. Now they're just listed from highest return if you was to invest a year ago today. So NASDAQ, you'll be up 25%. And then you can see, I'm not going to go over all of them, but basically it's around 10% besides the bonds right here. So bonds, I don't know why anybody does it, but that's just for, scary money. Even if you have a shit ton of money, you can still put into the SPY. But I understand. To each their own. Excuse me. To each their own as far as risk. So then again, these are the ETFs where everybody should start. I suggest picking either QQQ or SPY. So either this one or this one. Putting your money on auto deposit and forgetting about it. Because that's essentially what's going on with your 401k. Now, just to have a little bit of fun, my favorite calculator. So we're doing compound interest. And then let's say you start at 1500, which is ideally where you want to be. And let's say annually you did 15% and you compounded. Well, it's going to do it for you if you're doing an ETF. So let's just leave it at monthly. And let's say for the next 3 years, and remember this on auto deposit, you started with 15, and then let's say every week you're doing $100, which is like $400 a month. There you go. You got a down payment for a house. Yeah, this is enough to get you into any $350,000 house with a 3.5% down payment with an FHA loan. I forgot to mention, by trade, actually been in real estate for over 10 years. So yeah, this will get you a down payment, more than enough to get you into a $350,000 townhouse, house, condo. Of course, depends on the area, but all you have to do is $100 a month. So technically, over the past 3 years, you put $15,000 in there, and then 15% was the $4,000. So $4,000, $4,700 of free money essentially. And this is just putting your money into the S&P 500. And I did 15%. So there'll be some years you get more, some years you get a little bit less, but majority of the time, you'll be around here, 1,500. I'll give you another example right here. So type in S&P 500. Let's just say the last year. Today's the 18th. 19th. So I can't zoom in on this, but essentially this is going off $10,000. Easy math. If you did $1,000, still the same thing. But if you invested $10,000 a year ago, you'll be up 17%. So a little bit more than that 15%. And this is assuming you reinvested everything, which again, if it's in the S&P 500, it does it for you automatically. So yeah, an extra $1,700. You can see that right there. And that's just you not doing anything with $10,000. So, if it's $1,000, it's 174. Same thing. So that's the easiest route. I always suggest a lot of people to start there, because it's a little bit different when it comes to stocks. Stocks is like, once you're tired of the ETFs and them already having a basket of stocks and you've grown some money to pick your own stocks, or if you started with 1,500, we can go to talk a little bit about that. It is slightly different, and there will be a lot more volatility, which means you can earn more, but it could mean like some months, some years you can be down. But if you're contributing every week or every month, then dollar cost average is going to be your best friend. But let me go back to this. So we talked about ETFs. Did I strike through? Oh, well, you get it. Now for stocks. Stocks is pretty simple. Turn this down. So went with the most popular again. So Magnificent 7. Now, all this is relative, everything's approximate. I just went back to the past year. So if you invested 1 year ago today, same thing. Nvidia, you'll be up 170%, Meta 90, Amazon 60, Microsoft 40, Google 35, Apple 20. Excuse me. And Tesla, I forgot what they were just going through right now, but you know the whole thing with Elon Musk. So they happen to just be down 10%, but I bet you if we check later, or maybe let me show you something. So if you take Tesla, compare by the S&P 500, yeah, so as of today, if you'd invested 1 year ago, you'll be up 70%. So big difference. 70%, $7,000 or $700 if you're using $1,000. Let me change this. So whenever I pulled it, so approximately 70%. We can do it with all of them. I'm not going to do it. This website is called the Dividend Channel. So you can, just come here, put the symbol you want to compare things to, which we're going to be using this one a lot. Going to be using this a lot. So stocks, there's a few websites you can use to find your news, but obviously just Yahoo Finance, one of my favorites, Seeking Alpha. My number one rule of thumb is when it comes to stocks, what you want to do is invest in, look at what you got on right now. If you're wearing Nike, if you got an iPhone, like you get where I'm going. So invest in what you use every day, what you buy a lot. If you're a female, the makeup companies, look into them, who owns what. And then if you're starting with it, $1,000, just throw it into one or two. Don't spread it out too much until maybe you got a certain amount of shares. Ideally, you want to aim for 100 shares. But if you're talking about Tesla or any one of these stocks, let me see what their price is. So it might be a dollar amount. Yeah, 100 shares of Tesla is $42,000. So I doubt you want to go that far. So, just aim for a dollar amount because you want to see gains. You want your chart to actually move and not just stay still. That is another strategy, which I'm going to talk about, like trying your best to, stay still and just collect dividends without your premium moving up too far. But essentially, just going over, overview of all these. So as far as high yield ETFs, options, crypto, prop firms, I do have, I think this is the high yield ETF one. Yeah, so let's see if I go to this website. Yeah, so they're already getting pretty high. I'll go in deeper into these, but just for an example, let's just say we went into this one. It says your dividend yield was 293%. So this is ETHD. And this is an ultra short. Let's not do that. Let's do this one. No, that's short too. Misty. Everybody's favorite is Misty. So let's do Misty. It says you make 160% compared to the S&P 500. So as of a year ago from today, you'll be up 97%. And Misty basically goes off of Michael Saylor's MicroStrategies, which is MSTR. And he invests a lot into crypto. So essentially think of this as investing into crypto, but somebody else doing it for you. Now, the top portion is with dividends reinvested. In Misty, they pay monthly dividends. So if you didn't reinvest it, you'll be up 87%. If you did reinvest it, you'll be up 97%. So still good. I mean, considering if you got in a year ago from today, but let me show you something. So if we type in MSTY and see what they're doing currently. So even if you got in a year ago, so this is based off 1 year, you will be down 28% as far as, the value, your dollar value for one, but the stock value. So currently, as of today, the stock is down 28% to $16. From a year ago, oh, don't tell me. Well, either way, 28%, so just add 20%. But and SP 500 be up 16%. So now when you look at this, in order for them to pay you, it looks like they have to take it out from, their covered call strategies, what they're doing, I believe, which we'll go over that in the options section. But yeah, it steadily just goes down. But remember, you're collecting dividends. So if we include the dividends into this, so orange is without the dividends, blue is with the dividends, you'll be up 92%. So assuming you either reinvested it, you'll still be up 92%. But what I like to do is don't automatically reinvest it. And if you're only gonna do one stock, then reinvest the money on down days, which obviously look like every day is a down day, but you see all these pops. So at the end of the week when you get paid, because this one pays you monthly, so at the end of the month, reinvest it when it's down, which will probably be down like 5 or so percent, or maybe be up 15%. Just wait till a down day, or put it into something more stable. So take your gains and put it into the S&P 500. And now you got this paying you to invest into the S&P 500. So we'll go over these strategies more in detail. I'm just giving you like a little sneak peek, I guess. So basically that's the high yield weekly, monthly ETFs. And you got options. So I believe with the options, take that off. So options, I mean, you can guarantee yourself as little as, not as little, but you can guarantee yourself 10% to infinite, really. Now the infinite part is gambling to me, but to guarantee yourself, there's a bunch of different strategies you can do. I like to use options just to buy stocks at a little bit of discount. When they actually go down, it'll automatically execute my order for me. And in the meantime, I get paid to wait. That's this portion right here, the cash secure puts. So I like to do these the most. This is my favorite. I don't really like to do covered calls because you're missing out on the gains, especially for the stock you like. Excuse me. Now, if it's a stock you don't care for, or if you're going to use a particular strategy, which I'll go over in detail using American Airlines, then yeah, you're going to want to sell covered calls just to collect the stock appreciation and the premiums gain. And then spreads, I still do these all the time. I'll show you on my paper trading account since I no longer have an actual account doing spreads because I do something else now. What was that? My Slack? Take that off. But yeah, we'll go into spreads in more detail. Spreads, you can make, 30% a month, 50% a month. I think it's pretty much what you can make is around 50% a month. You can probably make more, but I think 50% a month is because they're capped. And we'll go over that too. But yeah, so estimated returns, minimum, I'll say is around 10%. Let me put that right here. To, let's just say infinite. And then what is this? Oh, yeah. So my two favorite ones was just cash secure puts, aka selling puts or collecting premium. And then covered calls, I only do on stocks that I have a set plan for and I don't plan on keeping it long term. But it's a good way to, when you're like, let's say you have a stock and you're ready to, like Apple, let's say you had a bunch of Apple shares and you're just ready to sell out some to take some money. You can sell a covered call on it. So that way, when it finally does reach your selling point, you're still collecting premium on it until the day, if the day it reaches, your set strike price that you want to sell it at. So that's a good way to collect premium while you're waiting for your shares to get sold off. Where are we at now? So obviously, my favorite ones right now is crypto, prop firms, and day trading accounts. So just because not much to really talk to you about with prop firms and day trading account. Well, there's a lot to talk about, but again, I'm gonna give each one of these, besides 1 and 2, their own separate videos. 1 and 2 are just leave it at what I talked about today because it's pretty simple. But crypto, there's a lot you can do in crypto. I think, is this one it? Yeah. So crypto, you can do everything you can do from legacy, and legacy is just, open up a Robinhood account and buy stocks, buy and hold. That's the same thing as you can do with crypto. You can open up a Coinbase, crypto.com, Kraken. I think I spelled that wrong. A Kraken account, you know, Gemini account, buy Bitcoin, put it on the auto deposit and just forget about it. That's called centralized exchange. Decentralized is what I do a lot. Is where you can use Pancake Swap, Uniswap. You can stake. You can be a liquidity provider. So obviously this is gonna take its own video, but again, I'll give you like, well, here's. Do I have it up already? Whenever it does up. So here's one of the platforms I'm using right now. Of course, it wants to go slow now. Okay. So here's some of the positions I'm in right now. Something slight. But yeah, that's that. And then finally, of course, prop forums. Here's the ones I'm using right now. I think I forgot to add, my day trading accounts. Well, I think that's why I didn't do it, because it don't matter. You can just do it, any account that you want. So, Funding Ticks and Bull Knocks is who I'm using right now, and I'll give them their own separate videos because prop firms have their own rules and their own payouts. But you can get in with as little bit as $50 and get a $50,000 account, which to me that's like saying you have a $2,500 account, because that's how much they'll let you lose before they take the account from you. So yeah, I mean, that's an overview. I think I'm echoing. Hopefully not. But if I am, I'll fix it. What was I saying? Yeah, it's just an overview. And we'll get started in the details. So the first one is going to be about high yield ETFs. One thing I did forget to show you was the little $100 account that I made. Oh, oops. It's about to refresh eventually. But this one's a month old. See, just a month old. And it's been very stable. Well, to me, this is stable compared to what I'm usually in. Here's the positions that I'm in. And I get paid every week for one of them and then monthly for the other two. Yeah, so QQI, or the other three, CRF, BTCI. These three pay me monthly, so I haven't got a dividend from them because I just missed it. Let me show you. Did it already update? Yeah, so I had just missed it. So I started this on August 20th, which is the date that they do the X dividend. And for dividends, you need to own it the day before the X dividend date. So I needed to have started it by August 19th, which I wasn't planning it and I didn't even know what days these paid. I just just started on that day. But with MSTW, which is the one I'm liking so far, so this one's brand new. So it's like Misty, but newer and with Roundhill. Yeah, they just paid me on the 16th, which I think is every Tuesday. So I get paid every Tuesday from this one. And if we go to activity, so you can see. So dividends, it says past 30, but just to show you, I only started this 30 days ago. So August 26th was my first time getting any dividend. It was 56 cents, but you can see I pretty much made over a dollar. So 56, 63, 4. Yeah, 1, 2, 3, 4. So 4 times in 1 month, over a dollar. Wonder, maybe it's under, there we go, performance. See how much I made in dividends total. Yeah, so $2, $2.56, or $2.88 total in 1 month. So almost 3%, and then plus the appreciation. But even if it's 3% a month, which I'm thinking, because I only invested $56, right? Average cost. I could use this. So here's my spreadsheet that I made. Yeah, so MSTW. Yeah, $50. I only invested $50. And off that $50, I made $2.38. So I wonder if how far are these numbers off? Because I know it's at $48, so it's going off to 48. But I'll just leave it at 50. At 4%. So I've already made, well, a lot over 4%, almost 5%. But I've already made 4.76% on that one. So let's say it keeps that up every month. That's a 57% return just off that one stock, which can be met at that. So saying right now, I'll probably make 33%, but this number changes every day. So I'll start doing weekly updates on all these accounts. But let me go over my summary page while I'm here. So it says I deposited 1,700, which that's between all these accounts that I have at the bottom. Right now I have 1994 invested, so I've made 13% this month. So based off those numbers, it says I should get around 526%, and that's mainly because of crypto. And then right now my actual 70% weighted, meaning taking all of them together, that's what this is saying. So on DeFi, yeah, so right now I'm up 16% on that. So I started this one with $1,000. Well, I started this one with 1025, and right now I'm at 1193. And then my small personal account, so started that one just under $600. Made 18% so far this month. Yeah. And then this was a test account, which I'll explain it when we start talking more about crypto. Yeah. So I'll go over this spreadsheet in more detail. But it looks like so far this month I'm at $2,000, 2,500, and my goal is 2,180. Let me make sure that's right on the summary page. Yeah, something's off here. I gotta look at this more. Or maybe this ain't updated. But it's still saying 2,500. Oh, I think I forgot to add the cash. Yeah, that's just how much I've invested, so it's not including the cash. So total including the cash, I'm at 2,500. Okay. Either way, now we can go back to the next one, which is the high yield ETFs, and talk more about that one. I did forget to mention that just to reiterate what I said earlier, red days are for buying. Green days, if you are going to sell, those are the days you sell on. If you are selling, which I don't recommend selling ever for the most part. If you can avoid it, that's what dividends are for. or just take a loan based off your stock portfolio because loans aren't taxable, I think. But regardless, red days are for buying. So if I was like, let's say I did want to add to my MSTW position, since total I'm down 2%, I might wait till I'm down 30% if I'm ever. Like I haven't had them long enough to know like what's the most or what should I expect when I am down. But let's say I've had them for over a year already, and I expect like okay, I've seen it down 10%. So if I'm down 2 to 5%, I'm okay adding on to that. Like I only want to add on red days, especially if it's total still down and I still like the stock. But it'll be hard to add on things like my QQQI. I'm already up in 1 month 5%, and I haven't got paid not one dividend. That's mainly because Nasdaq is going at all time highs, which today I think it reached an all time high. But there's gonna be months and years where the economy's bad and everything's just going down. Ideally, that's when you want to reinvest your cash. So maybe just let your cash build up for 2 years, 3 years, 1 year, whenever we're having a down market that lasts for longer than 2 months. So at least 2 quarters. That's ideally when I like to, add more onto my investments for my long term stuff. So this account right here, which I plan on adding into it and just letting it grow naturally and see where this $100 ends up maybe in the next 2, 3 years. So whatever extra money I have, I'm just gonna throw it in here and let it do what it do. Because if I am gonna make 33 to 40% off this, let me see. So let's say right now it's at $100, which basically is like $40 a year, and I'll go off 30% annually for the next 3 years. And let's say I add an extra, because it's just gonna be extra money. So let's just say $100 at the end of every month. So even this account will be $6,000, even though I've added 3,600, so almost half of that. But still, an extra $2,200 of free money. So let's say I leave this for my daughter in the next 16 years when she turns 18. You know, that's why I say for these accounts, long term to me means 10 years or longer, and you're not thinking about taking no money out of it. If anything, you'll just make another account that you plan on taking money out. I'm about to sneeze. But ideally, even this $100 account that I add $100 to every month and just let it do what it do, and then give it to my daughter. I mean, assuming I'm still making 30% a year, which obviously you would, because when you have growth, let's say you bought Apple at $100, now it's worth 300, and you're still making 2% a year. You're essentially making 6% a year, just because the appreciation. So still should be somewhat give or take around there. Maybe even half of this, even if it's 200,000. Shit, that's still okay with me. But yeah, long term to me is 10 years or more. Everything else is, what have a goal for what you're gonna be doing basically. So let me make sure I hit everything. Yeah, 10 years or more. Red days are for buying, and we're talking about stocks and ETFs. And then go with companies that you know and like and that you buy every day. So if you like Nike, start with Nike. If you like Adidas, start with Adidas. You get my point.